Hi, in this video I'm going to focus on a very basic but very important topic. If you don't understand this topic, you may prepare your statement of financial position in a wrong way. You may prepare your statement of comprehensive income incorrectly. Hi, if you're new to my channel, I'm the commerce specialist. I create videos covering learning outcomes of various academic qualifications and professional certifications, including life-changing business ideas and hacks. If you're not yet subscribed to my channel, please subscribe to my channel, press the bell notification button so that you get my videos on a timely basis. Now let's jump into the discussion. In this video, I'm going to discuss about capital and revenue expenditures. So before you understand capital and revenue expenditure, let me tell you, when an organization spends money, that can be categorized as either capital expenditure or a revenue expenditure. So let's talk about capital expenditure first. Any amount spent by the organization for which benefits will be enjoyed in a number of years in future would be categorized as capital expenditure. Like buying a non-current asset, buying an equipment, a machinery, a motor vehicle, building, land. What is it? A non-current asset. If you buy a building today, you're spending the money now, but you'll be using the building for a number of years. If you buy a motor vehicle today, you're making the expenditure today, but its benefits will be enjoyed in the years to come. Capital expenditure. Another feature of capital expenditure is, if you have made an expenditure, as a company obviously, if you have made an expenditure, that expenditure may increase the production capacity of the asset. Which means if it's a machine and you have done a specific expenditure on the machine, before the expenditure used to produce 10,000 units in a month, after the expenditure it has gone to 14,500. So if the production capacity has increased as a result of expenditure, it will be categorized as capital expenditure. Sometimes you make an expenditure on an existing asset, as a result its capacity is increased. For example, storage capacity. For example, if you have a computer and you change the storage capacity, the RAM, ROM, whatever you call it, it is considered a capital expenditure because you're not going to change the RAM or ROM of your computer every day. Sometimes you do a capital expenditure on an existing asset and it enhances its efficiency. By efficiency, I mean that it saves you on your raw material input. That is also considered capital expenditure. Sometimes you do an expenditure on your existing asset, as a result its life is increased, its useful life is increased. That is also considered as a capital expenditure. For example, if you have an old Jeep, you change all the 4 tires, put a new engine, battery, everything. Now the Jeep, which would have lasted another 3 years, now it is good for another 10 years. So if the life in years is increased as a result of the expenditure of the non-current asset, we term it as a capital expenditure. Capital expenditure could be like you have spent some amount on an existing asset, as a result its value has gone up. For example, you had a flatbed truck, the long vehicle, the long truck, and you install a tanker at the back so that you can transport oil from one place to another. So the flatbed trucks comes without tanker. Now when you add a tank on it, number one, it increases its capacity. Number two, it increases the value of the asset. This expenditure will also be categorized as a capital expenditure. Another example of capital expenditures are all important mandatory expenses. When I say legal and mandatory expenses, I mean, for example, we are talking about import duty, custom duty, transit insurance. All these are mandatory. If I want to import a car from Germany, yes, I have to pay the import duty. I have to pay the custom duty. I cannot import if it is coming through sea. I have to pay the transit insurance. I have to pay the freight. All these are mandatory. Whether you import or I import, we have to pay these legal charges and mandatory charges. These are also called capital expenditures. I will give you some more examples. Like as I said, import duty, custom duty, transit insurance, installation, testing, legal charges, government fees. These are all capital expenditures paid once in the life of the asset. Another example could also be like, a major overhaul of an existing old asset. As a result, its performance, efficiency, capacity, and value as well as life increases. Any of this happens, that means it's a capital expenditure. On the other hand, we have revenue expenditures. Revenue expenditures are those expenditures which are incurred to ensure the smooth flow of revenue to the business. For example, if you have a transportation business, you have trucks which goes to and fro, transporting oil from one place to another or any other goods from one place to another. You have to keep the truck well maintained. You have to do the service and tuning, the oiling and lubrication. If there is some puncture, you have to make that. So these minor repair and maintenance are done in order to ensure smooth flow of revenue to the business. So these are revenue expenditures. Unlike capital expenditures, when we talk about capital expenditures, we're talking about expenses made now and benefits are enjoyed over the number of years in future. But for revenue expenditures, once you make the expenditure, simultaneously is benefits are enjoyed. For example, if you fuel up your car, how long do you think the fuel will last? It will not last for ages and years. So if you fuel your car up now, you take around, let's say, of the city and the fuel is gone. That means you incurred an expense and you got the benefit. This benefit will not last for years and years. I hope my point is clear to you. So some example of revenue expenditures are like oiling, lubrication, service and tuning, license fee of the driver, minor repair and maintenance. Another category of revenue expenses are like they are recurring in nature. Like every time you have to fuel your car, for example, it's a revenue expenditure. Minor repair and maintenance will go on as long as you have the car with you, the motor vehicle with you. Repair and maintenance, oiling and lubrication, service and tuning, fueling, all these are revenue expenditures because they are very frequent, they are recurring in nature. As compared to capital expenditures, like you will not buy land every day, you will not buy motor vehicle every day. It's a one-time expenditure normally, and then you can enjoy the benefits for another 4, 5, 10 years, whatever. Now I'm going to explain you why are we trying to differentiate between capital and revenue expenditure. So let me give you an example. Let's assume you purchase a motor vehicle for $100,000. This is the cost of the vehicle. And then you incurred many expenses. Some of them are capital expenditures, right? As I told you, installation, testing, transit insurance, import duty, custom duty, any other legal charges. So all these capital expenditures, when you add, let's say it comes to 30,000. This will be added in the cost of the asset. Now this is the new cost, which will be reflected in the statement of financial position. This is the new cost upon which you will be calculating depreciation. So all capital expenditures incurred will be added to the original cost of the asset to arrive at the new cost, which will be reflected in statement of financial position, which is the balance sheet. And on this new cost, you're going to calculate depreciation. So if you don't know what are capital expenditures, and by mistake, you add some revenue expenditures in the cost of the asset, so this amount will go wrong. When this amount goes wrong, you'll be posting a wrong amount in the statement of financial position. You'll be calculating wrong depreciation. Wrong depreciation means your statement of comprehensive income will also go wrong. So let me tell you, all revenue expenditures which are incurred are directly charged to profit and loss. That means they go as an expense in the statement of comprehensive income. But all capital expenditures are added with the cost of the non-current asset so that we arrive at a new cost, and I told you how the new cost is used. So ladies and gentlemen, if you have any question relating to capital and revenue expenditures, do leave a comment. I will reply to you. If you're not yet subscribed, please subscribe to my channel. That's how you show that you value my work. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.